Peter Churchouse, welcome to the World Wealth Creation Conference in Singapore 2017.
Yeah, it's great to be back. I was down here a week or so ago, so it's great to be back. And I haven't been in Singapore for a few months, so it's nice to be back down here and see what's going on.
Wonderful, wonderful. And, you are the Asian property guru. You've been in the space here in Asia for the last 37 years.
Well, I'm not sure who came up with that title, but it certainly wasn't me. But yeah, it's true. I've been hanging around these shores since early 1980. And of course, we've seen phenomenal transformations in these economies over that time. And I've just been privileged to be able to share in that and be a part of it.
Yeah, wonderful, wonderful. And, over all of those years, how would you describe the development of the real estate economy in Asia and how it's developed from how it would have been in the 1980s compared to now?
Well, I think Asia has actually benefited hugely from two events that happened back in 1979 and 1980, which was the election of Margaret Thatcher in the UK and the election of Ronald Reagan in the US. And following their elections, we saw a massive upwelling of globalization, free trade, free flows of capital, free flow of labor, ideas, and it was really helped transform this part of the world. China was just opening up at that stage, and that transformation in Europe and the US really underpinned the tremendous growth that we've seen in Asia subsequent to that time. So really, in a way, we have Europe and America to thank for the great growth that we've seen to a large extent in Asia over the last 35, 40 years.
Wonderful. And you're primarily based in Hong Kong, which was handed over from the British in 1997, so 20 years ago from now. And I think people at that time predicted that things would not go so well, but in fact it's been the opposite, would you say?
Well, I think people around the world were looking for an accident to happen, looking for the communists to come in and crush the place. Well, people who are living there like us, we didn't buy into that theory at all. We were pretty comfortable that China would really let Hong Kong carry on pretty much as it always had been. And that's exactly what they've done since that time. So yes, things are changing a little bit from time to time, and we're seeing a little bit more presence of the Chinese companies and the Chinese government in Hong Kong than we've seen in recent years. But still, all in all, Hong Kong's a great place to do business, a great place as a conduit for capital in and out of the region, and particularly in and out of China, of course.
Wonderful. And what would you say are the hotspots in Asia going forward into 2018 and maybe over the next 5 years in terms of investing generally?
Well, I think Asia has underperformed, certainly underperformed the US market in the last few years. It's been out of favor as far as investors and stock markets are concerned. So I think Asia is actually very cheap right now. If you look at the common metrics of price-earnings ratios and price-to-book ratios and all that kind of stuff, it's like one standard deviation below the long-term average. The US market is 2 standard deviations above the long-term average. So I think we're going to get some kind of merging of this in some ways. And the markets that, of course, will be focused on most are really Hong Kong and China, or China and Hong Kong. And in ASEAN, you'll be focused more on Singapore, because Singapore is the conduit for capital and expertise into the ASEAN region, into Indonesia and Thailand and Malaysia. So both of these cities act as a conduit, act as an entrepot city, and that's where all of the capital market action tends to be focused. It still happens in these other cities, but the concentration tends to be in Hong Kong and Singapore.
Wonderful. And what realistically is the opportunity? What is going on in Asia over the next 10, 20 years that makes it such a fantastic real estate opportunity?
Well, I think that there are two threads here. Let me just talk first about the thread of middle class. If we think about the world middle class, the people entering the middle class, which is really what drives consumption and economies around the world, over the next 7 years, we're going to see something like 1.1 billion people around the world join the middle class. Of that 1.1 billion, 940 million are going to be in Asia, primarily India and China. and to a certain extent in Indonesia as well. So the big driver of consumption and growth in that respect is going to come in Asia. If you're looking to tap into that in any way which you like, you've got to be focused on Asia to capitalize on that growth. The second big theme is what I call urbanization. Over the 15 years from 2015 to 2030, we're going to see 460 million people move into the cities in Asia. 460 million additional heads, bodies are going to be located in the major cities in Asia. Now, you think about what that means. These people all need to be housed, they need to be educated, there need to be schools, there need to be hospitals, there need to be roads, infrastructure, office buildings, shops, hotels, you name it. And if you just think in terms of housing, that means we're going to have to build 104 billion square feet of floor space to house those people. 104 billion, the numbers are staggering. And if you think about it in equivalent terms, we're going to build 50 Londons in the next...
Wow.
50 Londons in the next 15 years in this part of the world. We're going to build, in terms of office space, we're going to build something like 30 to 35 Hong Kongs. Now, anybody who's been to Hong Kong, you can see office towers everywhere. Well, the rest of Asia, we're going to build 30 of those cities in the next 15 years in terms of the equivalent space and offices. So capitalizing on that growth in bricks and mortar and hard assets is where I spend a bit of my focus in terms of investment. We can look at all sorts of other sectors, technology, manufacturing, healthcare, all these are big areas. Green energy, also a big area. But to me, this gorilla in the room is this 104 billion square feet of real estate that's going to have to be built to house these people.
That's an incredible number, numbers we're talking about here in terms of the opportunities. So as an investor, should I be going out and trying to buy a property in China or Vietnam? Yeah, or anywhere. Is that the right way to do it?
Well, there are two ways. One is to buy bricks and mortar yourself. And quite frankly, for somebody sitting in Milwaukee or Manchester, are you going to realistically go and buy a property in Vietnam or Bangkok or even Hong Kong or Singapore? Probably not. Now, if you are looking at buying bricks and mortar, I would strongly suggest that you look at rule of law countries. And there's only a handful of them in the Asian region. It's Singapore, Hong Kong, Japan, and you might include New Zealand and Australia as part of the Asia-Pacific basin. Those are the only real rule of law countries where you can take your money in, you're treated respectfully by the law, you've got equal treatment of the law, the tax system is transparent, etc. That is not the case in most of the other countries in Asia. But you can invest in stocks in any of these markets, real estate stocks or hard asset stocks, whether it be in Thailand or Vietnam or China or Hong Kong, Singapore. So in a way, the easiest way to do it is to buy the stocks of the companies that are building this 104 billion square feet of floor space. And there's lots and lots of stocks that are growing at 15, 20, 25% per annum over the next few years. I can put a portfolio of real estate trusts together that will give you an average dividend yield, very low risk, of about 6.5%. If yield is your thing, if growth is your thing, you buy property developers. So in a way, buying stocks is easier than buying hard assets physically in Asia.
Fantastic. And so, we've been around for many years and seen various property cycles in the West, for example, and in 2008 there was a huge crash which was caused primarily by the subprime markets. Could something similar happen in Asia whereby there's massive growth, massive buy-in, but then a slow economy where people cannot afford to get their properties and therefore stock value, property value falls dramatically? What do people do? Is it possible that happen?
Well, it certainly is possible. The Asian property markets are much more volatile than those in the West. The 37 years I've been in Asia, I've seen 8 down cycles, for example, in the Hong Kong market. In the same time, in the US or in the UK, there's been 2 down cycles. So the cycles are much longer and much shallower in the West. Here the cycles can be much more volatile. For example, when I first arrived in Hong Kong, over a 3-year period, the average house prices in Hong Kong rose by over 100% per annum over that 3-year period. You just don't see that kind of thing in other markets. So the volatility here is very exciting. Now, volatility is an opportunity and it's a problem. Obviously, you can get caught on the downside and you can get hurt on the downside, but then you can also capitalize on that downside. When you hit a bottom, you come back into the market and you can buy very cheap stocks and make a huge amount of money on the way up. And that's kind of what we try and do, try and figure out where the risks are. And yes, there are risks. We saw in the Asian financial crisis in 1997, that spread right the way around the region. Started in Thailand, and we had a huge contagion effect. It was much worse than any of us expected. We saw it coming, but we didn't see the severity and we didn't see the reach. We thought it would be about a 20-25% downside. It was much, much more than that. And we thought that it would only really reach around Thailand, Indonesia, Malaysia, but it didn't. It hit the whole of Asia. So these contagion effects can happen. I don't see one sitting out there right now, but it's not to say it can't happen. Just like I'm thinking that in the US, we're going to see a downside in the US market in the next 2 or 3 years.
Fantastic. So Jim Rogers would tell us that the best time to buy into investments is while the prices are still affordable and before it really becomes a gold rush. So what would your advice be, from your perspective, to anybody looking to start their journey in investing in real estate in Asia?
Well, if you're looking at buying physical real estate right now, the market that I would look at that really jumps out at me is Singapore. If you're looking at residential market, this market has been trading downwards, not steeply, but downwards for the last 3 to 4 years. We've had an oversupply situation in Singapore, no question about that. They had twice the amount of long-term average supply, so prices have been depressed. So that's bottoming out now. The supply side is equaling out, and you're going to see prices start to pick up in the next year or two. The stock market's telling you that, but the properties haven't yet picked up. So if I were somebody looking to buy an apartment or even some office space, I would look at Singapore as a good place to start. In terms of stocks, I would look at China, and not just Singapore, but in China, in Hong Kong. I can find any number of property stocks in China that are going to deliver me 20-25% earnings growth over the next couple of years, and they're trading at 6 or 7 times earnings. That is extremely cheap by world standards, and it's cheap even by Hong Kong and China standards. So stocks, I would look to some of those more volatile markets because they are cheap right now. But in terms of physical, Singapore is a good bet.
Fantastic. Well, there you have it. Singapore is a fantastic place to invest in real estate properties, and having been here for 8 years, I'll certainly agree with that. Peter Churchouse, thank you very much.
Great, very nice to see you.
All right, thank you. Okay.